Let me now bring on board Sandeep Bhatia, Executive Director and Head of Sales with Kotak Instl Equities. Sandeep, good morning. Thank you for joining us. Sandeep, we started the year with some force, but suddenly, fundamentally, fundamental triggers and technical triggers are not looking all that supportive.
I think, everything should not look good all the time. That's what makes the market trade up and down. So what do we say? I think the big fundamental trigger is the budget. At least they'll give us an inkling of what the government wants to do. I expect a decent budget. I think it will be a fiscal deficit of sub 5%. There would be rise in taxes. So it would be broadly a responsible budget. So that would be good for the market. I think the easy part in terms of re-rating is over. We all know that. So it's now the question of earnings growth delivery. And earnings growth delivery takes time, right? Because it takes a lot of hard work and requires passage of time. So we have to now, stay here for some more time and just wait for cues on macro, and then the market can go up.
Hi, morning. A lot of government paper to hit the market. You've got NTPC, SAIL, MMTC, RCF as well. Anything that excites you?
I think government paper will see good demand. It's a question of where we see pricing. I think we have seen sensible pricing by the government till now. So if that continues, we can definitely see good demand coming in from investors. Also, it's part of the same macroeconomic fiscal consolidation and raising of receipts from divestment. So all that is just playing into the picture of slightly improving macro. More important, I think we need to see some strength coming through in terms of the currency. I would think the move on the currency in the last couple of days is actually as important as market moves. So I think the belief is that we will see some control of fuel subsidies and so on, and that's also helping the Indian rupee. So the way investors make money, if you are a foreign investor at least, is that either you get absolute returns in terms of share price appreciation, or at least the currency also starts appreciating. So we are seeing that leg right now on terms of currency appreciation coming through, which is a great thing.
So what is your house view on NTPC? We understand that the OFS price will be at 145 rupees per share. Are you advising your clients to buy that?
Yeah, I think we like the stock, and I would definitely expect good demand coming through from all large domestic and foreign investors.
Sandeep, are you a little cagey about seeing what Jubilant FoodWorks reported yesterday and what the future, or at least the near-term growth trajectory for some of these discretionary spend-related stories is going to be?
I think you hit the nail on the head. I think we will see sector rotation. I think we will definitely see some amount of profit-taking in consumption stocks. We have seen trends coming off in terms of volume growth for all large consumer companies. I think Jubilant has done a fantastic job since its IPO. We were the bankers there, and it's given stellar returns from there. There is some readjustment of strategy and spends and so on, which any business has the right to do. And I think the management is doing that, which will essentially mean that the growth will come through in the future. So that's part of life. I don't think every quarter or every single data point has always to trend up, and the management has done a fantastic job of delivering a good product and at a good price, and it's finally showed up in the stock. So I'm sure that will continue.
Which means you are bullish on Jubilant FoodWorks?
I expect sideways movement right now, but yes, I mean structurally we are bullish on them.
So at the current juncture, what are your classic long-term ideas? Which are some of the key stocks you're advising your clients to buy for the long haul?
We like Tata Motors. We like Tata Motors primarily because we have seen improvement in terms of product portfolio. We have seen volumes go through. The kind of capex they are doing is primarily growth capex, and that should definitely help the stock. So Tata Motors is one of our top picks. In the pharma space, we like Glenmark. I think Glenmark is a business which will see significant inflows in terms of R&D research income on top of very strong domestic and international volume and value sales growth. So combination of very good research income, expansion of margins, and good top line growth will drive Glenmark earnings. So these are some of the stocks that we like. If you could also look at the IT sector. I think there's sector rotation definitely happening. To that extent, we could look at TCS and Infosys. If the U.S. economy stabilizes and gains ground through 2013, that's one sector which did very badly last year, which can see stronger performance.
Do you think that Indian markets currently are stuck in a state of limbo? Consumers are slowing down and the investment cycle is yet to pick up. So we pretty much are getting compressed from both the ends.
Yes, you can say that, or you can also say the fact that consumption has been strong for the last 3 years, and it will take some slackening in the transition period before the capex. Everyone knows that even if you decide that you want to start spending today, it will take at least a year or 2 years before the actual spending will materialize on the ground and will start impacting economic growth. So this will be therefore the phase that the capex will take maybe a year at least to come through. Even in L&T results and across all large infrastructure and construction companies, we have heard the same commentary that while the policy environment is improved, the policy action on the ground will take some time longer to come through. So to that extent, yes, we are in this transition phase, which is why we have to look at either macroeconomic news and data points, whether it's the budget or whether it's, let's see how the fuel subsidies go. Or we have to wait for earnings, and earnings will take some time. So therefore the easy part is done, and this is therefore the time to wait for earnings to come through. I think the second half of this year is when the earnings trajectory will be clearer, and that will also give some fresh information to the markets.
Sandeep, would you be a buyer in any of the PSU banking names, Dena Bank, Bank of India, BOB, or even in SBI after the recent correction on account of the bad quarterly performance?
So we have always been very careful in public sector banks. The thesis is that better to stick with large and good banks, preferably private, to the extent that they have the ability to drive strong growth without taking undue risk on the portfolio. We've seen time and again that some of the public sector banks have an NPA issue. Within the public sector banks, I think SBI is the best. So we have seen high and elevated level of provisions throughout the current chairman's tenure. So I don't think there should be any big kitchen sinking happening in that bank. So we prefer SBI.
Sandeep, crude currently is at $96 to a barrel on the NYMEX. Would you expect OMCs to make those small adjustments to diesel prices to perhaps give confidence to investors that the process is very much underway, or do you think it's going to happen only after budget?
No, honestly, it's very difficult to comment what the OMCs will do, because it's partly a business decision and mostly a political decision. So, the factors that go into that decision making is impossible for someone like a market participant like us to fathom. The only message I'll go by is that the message coming through from the political bosses that there will be regular 50 paise rise in price every month, and I'll just run with that.
Okay, Suzlon is still holding on. JP Associates has managed to bounce back. Cipla in the run-up to the numbers is not looking all that charged up. But Jubilant Foodworks has reversed. There is some buying which for sure has surfaced up in Jubilant Foodworks. This could be some kind of a technical adjustment as well, because the stock was down, or the stock is still down a good solid 300 rupees from the recent time. Maruti is at 1625. Sandeep, to your mind, more than absolute dispatch numbers, it's the weakness in yen which is driving Maruti?
I think the Maruti results have been a combination of factors, whether it's industrial relation disputes at some point in time in the past, or whether it is the yen strength in the and so on, and the impact of competition. So the margins in any business, as we know, will be impacted by sales volume, by costs, and by currency movements. So as far as Maruti is concerned, yes, right now what's helping them is the fact that yen is now going to weaken. The Japan has become a net importer, which is a big thing. Traditionally, Asians powerhouse in terms of exports, built up huge surplus trade balances and so on and so forth, but now it's going to be a net importer. Energy imports in Japan, especially after the earthquake, LNG imports have taken a toll on the current account balances there. It's also an aging economy, and consumption will remain high while incomes and production may stagnate. So that's where Japan is for the foreseeable future. So that's something which is going to help the Japanese yen weaken. It's been one of the strongest currencies in Asia, and it's going to weaken is what we can see. To that extent, Maruti has borne the brunt of the yen hike in the past, and now it's going to benefit to some extent from the yen depreciation. But the real thing is going to be sales volume growth. If you take a 10-year frame, it's not going to be just a currency movement. It's going to be market share volumes and whether it can deliver a good margin on those volumes, and that will definitely come through by the end of this year. You will see that also playing in.
Right. Final question, Sandeep. Many experts also argue that Union Budget 2012 or 2013 is now in the price. The Finance Minister clearly has outlined that it will be a tight budget, which means the tone is known, and he also has given some kind of an indication on what the fiscal deficit number will look like for FY14. So we also know that how the balance sheet will look like.
Yes, you can say that it's in the price, but there are always announcements on specific industries which need to be factored in at the day of the budget. So we would wait for that.
Right, Sandeep, appreciate your time, and good to have you back on ET now.